A smart contract is a digital contract that can be programmed to automatically execute the terms of the agreement between parties. It is self-executing, meaning it doesn't require intermediaries such as lawyers or banks to enforce the agreement. A smart contract is made up of a set of rules and penalties that are written into lines of code. These rules and penalties are enforced by the blockchain technology on which the contract is built. The code of the smart contract is open source and can be publicly viewed and audited, ensuring transparency and trust. This eliminates the need for intermediaries, such as lawyers or banks, to verify the contract's terms and conditions. Smart contracts are also tamper-proof, meaning that once they are executed, they cannot be altered or deleted. This ensures that the terms of the agreement are upheld and that all parties involved are held accountable. Smart contracts have the potential to revolutionize the way we conduct business and exchange goods and services. They can be used for a wide range of applications, from supply chain management to voting systems. So, in short, a smart contract is a digital contract that is self-executing, transparent, tamper-proof, and enforceable on the blockchain technology.